Welcome to Financial Market Insights for Traders, where we break down market trends, investment strategies, and the key opportunities shaping the financial world. I'm Sophia, and today we're diving into a topic that every trader and investor needs to know about: the most profitable stock market indices to trade based on historical returns. Stock indices are some of the most widely traded assets in the world. They offer diversification, liquidity, and strong historical returns, making them an essential tool for traders looking to maximize profits. But not all indices are created equal. Some have consistently outperformed others, proving to be ideal choices for traders and long-term investors alike. So today we'll take a deep dive into the stock market indices that have stood the test of time. We'll explore their past performance, the trends shaping them in 2025, and what makes them great for trading and investing in the current market environment. Let's get started. Now, before we get into which indices have been the most profitable, let's quickly cover why trading indices is such a popular strategy. First, diversification. Rather than investing in a single stock, trading an index allows you to gain exposure to multiple companies at once, which helps reduce the risk associated with individual stock volatility. If one stock underperforms, others within the index can offset the losses. Then we have liquidity. Major stock indices have huge trading volumes, ensuring tight spreads and minimal slippage, which is critical for traders who need to execute orders quickly. Another key advantage is volatility. While some traders fear volatility, those who know how to capitalize on market swings thrive on it. Many stock indices, especially those in the tech sector, experience significant price movements, providing traders with countless opportunities to profit. And let's not forget leverage opportunities. Many brokers offer leveraged trading on indices, which means traders can amplify their potential gains, though, of course, this also increases risk. Finally, indices serve as barometers of market sentiment. They provide insights into the health of the economy, the strength of corporate earnings, and the overall direction of financial markets. This makes them excellent tools for traders looking to capitalize on macroeconomic trends. So, with all that in mind, let's explore the stock market indices that have been the most profitable to trade historically and why they continue to attract traders worldwide. The SP 500, the gold standard of index investing. First up, we have the SP 500, which is often considered the benchmark for the US stock market. It includes 500 of the largest publicly traded companies in the US, covering a broad range of industries. Historically, the SP 500 has delivered an average annual return of around 10% over the past century. And in recent years, particularly in the decade leading up to 2025, it has done even better, averaging 12 to 14% annual returns, largely driven by strong corporate earnings and tech sector growth. Even during market downturns, the SP 500 has shown remarkable resilience. Take the 2020 COVID crash. It dropped sharply but rebounded to record highs within months. More recently, despite concerns about inflation and Federal Reserve rate hikes, the index pushed past 5,000 points in early 2025, fueled by strong corporate performance and optimism around artificial intelligence and automation. So why trade the SP 500? It's highly liquid, meaning tight spreads and fast execution. It offers broad diversification, reducing risk. It has a strong historical performance with steady long-term gains. It's less volatile than tech-heavy indices, making it ideal for both short-term and long-term trading strategies. NASDAQ 100, the high-growth tech giant. If you're looking for an index with explosive growth potential, then the NASDAQ 100 should be on your radar. This index is dominated by technology and innovation-driven companies, including Apple, Microsoft, Amazon, Tesla, and NVIDIA. Over the past decade, the NASDAQ 100 has been one of the best performing indices in the world, delivering an average annual return of 15 to 20%. Some years, like 2020, have seen gains of over 40%, thanks to the rapid adoption of digital services, cloud computing, and artificial intelligence. In early 2025, the index surpassed 18,000 points, setting new all-time highs as investors bet on continued growth in AI, semiconductor innovation, and electric vehicles. What makes the NASDAQ 100 a great index to trade? It has high exposure to cutting-edge industries like AI and tech. It has a strong historical uptrend, making it attractive for long positions. It's highly volatile, offering more trading opportunities. It reacts well to market sentiment, making it ideal for momentum traders. The Dow Jones, a blue chip powerhouse. For traders who prefer stability, the Dow Jones Industrial Average (DJIA) is a solid option. It consists of 30 blue chip companies that represent the core of the U.S. economy. Historically, the Dow has provided average annual returns of around 8 to 10%, with lower volatility compared to the SP 500 and NASDAQ 100. While it may not have the explosive growth of the NASDAQ, it is favored by investors who seek long-term, steady returns with dividends. In 2025, the Dow has continued its upward trend, benefiting from strong performance in financials, consumer goods, and industrials. If you're looking for less volatility and stable growth, the Dow is a great option. Where to trade stock market indices? For traders looking to maximize their opportunities, index CFDs, contracts for difference, offer a flexible way to profit from both rising and falling markets. One of the best platforms for trading index CFDs is crystalballmarkets.com, which provides access to multiple indices, competitive spreads, and leverage options. Whether you want to go long on a bullish market or short a correction, CFDs give traders a way to capitalize on every market condition. Final thoughts. Stock indices remain some of the best assets to trade for those looking for diversification, liquidity, and strong returns. While the SP 500 and NASDAQ 100 have historically been the most profitable, traders should also consider indices like the DAX 40, Nikkei 225, and Hang Seng for higher volatility and short-term trading opportunities. The key to trading indices successfully is to stay informed, follow macroeconomic trends, and use a platform that offers the right tools and leverage. By using crystalballmarkets.com, traders can take advantage of global indices and optimize their strategies for maximum profit. That's it for today's episode. If you found this discussion insightful, make sure to subscribe, leave a review, and share this podcast with fellow traders and investors. Until next time, stay informed, stay ahead, and trade smart.